AGUA Special Call Meeting, November 18, 2021, at 12:02 p.m. Roll call, Ivan Sandoval. Absent. Maribel Diaz.
Present.
Esmeralda Solis.
Present.
Lloyd Loya. Cesar Rodriguez.
Present.
Ricardo Perez.
Here.
Good. Pledge of Allegiance. Public comments, Mr. Salinas?
No public comments.
Item number 2, discuss some possible action regarding selection of employee health insurance plan and all voluntarily ancillary products as presented by IM Insurance Agency. Mr. Smiley Martinez.
Good afternoon, everyone. For the record, my name is Ismael Smiley Martinez. I am the insurance agent of record for AGUA Special Utility District. Thank you again for accommodating us today. I know it was a little bit of a scheduling conflict for me, and I'm very grateful for you all accommodating that opportunity for me for tomorrow morning at the forum of my election. So I deeply apologize for the inconvenience in your schedule, but thank you for doing that for us. As in your packet, you'll notice that we have the health insurance information that we discussed previously at a budget workshop. I know, Ms. Diaz, you were not present at the time, so if you have any questions, I'll be happy to answer those at this time. However, what we are presenting, and I presented to the Benefit Committee and Mr. Salinas, is renewing our current health insurance policy. We had a rough patch this last year, and they offered us a 42.2% increase, which was going to be almost $180,000 in increases. And then so I went back, and you know, the fact that we have a great relationship with them, and it was just a very abnormal year for us on claims. They were willing to negotiate with us, and they brought it down to 30.8% increase. And with that, there is an increase. So we made some adjustments recommended by the Benefit Committee to the GM, Mr. Salinas, and then, of course, to you, the council, or the members of the board. Our plan is going to have an increase. We will be going up from $487 a month to $637. We did go out as per requirement by the auditors, and we got 3 different quotes, including from the incumbent company. One company wanted to, basically said, we're not interested because they gave us a self-funded quote, which is really not anything that we can afford if we were to get into the same situation again this year with quotes. One employee would wipe us out without being able to have funded the entire plan for the year. It's very difficult on a group this size. If we were a group like the size of La Jolla ISD, okay, you know, we would be able to, you know, share the cost and fund it. So then, of course, we had Humana. Humana gave us a quote, again, with, well, we're not really interested, but it was going to cost us a little over $1,100 per month per employee. So it was going to run us about $130,000 a month in premiums. So basically, we are with the best company, the one that's been, you know, the best to us with the employees. And if you look at your sheet there in front of you, we had, of course, the numbers that we need to look at are what AGUA SUD is paying for the employees, and it's the employee-only portion of it. It will be $637.27. And you can go down to the lower part of the page, and it'll show you AGUA SUD totals paid for employees for 2022 plan year. This is what proposed. So that would be $45,883.44 a month. Times 12 months, it would be $550,601.28 for the year. Now, the number that we've got there, 72, we inserted that number because we do have some pending employees that are on probation that will be, you know, meeting the elimination period of 60 days, so they'll be eligible. So we're already putting that number in so that the budget will reflect that. If for whatever reason that changes and it comes down, well, that's okay, because we have enough in the budget to cover that expense, okay? The GAP plan, if we would have continued with it, it would have been an additional $50,578.56. That GAP plan was something that AGUA SUD was paying for as a benefit to the employees. Unfortunately, because of the huge increase, we're talking about recommending not being, that being part of the program this year for the employees. It will be offered during open enrollment as a voluntary product. They will be able to purchase it on their own. And then we have the dental plan. That had a 5% increase. We were at $14 and change. It went up to $15.14. So that would be a total of $13,080.96. And then we do offer a life insurance, small policy with accidental death and dismemberment that AGUA SUD pays for. Benefit committee and the general manager also agreed we can keep that. So that's $6,436.80. If you look to the right, what we did is we subtracted the $50,578.56. So instead of $620,697.60, we would be at $570,119.04. And then at the bottom, you'll see, compared to last year, where we were at $493,346.64. Without the gap, we're going to have an increase of $76,772.40. That's without the gap plan. So that's what we're looking at. If the general manager and the board would like to have any questions or discussion on it, I'd be happy to answer the questions or entertain whatever recommendations you might have.
You get paid by the company, right? The insurance company?
I get paid by Blue Cross Blue Shield, yes, sir.
Okay. What's the actual price for employee?
600,
After they pay you?
I don't understand the question.
The actual price for the employee, for example, is gonna be $600 or $550. What is your
Oh, what I get paid?
Yeah.
I get paid a percentage. I get paid 10%.
10% of the?
Well, actually, in this case, I get paid 5%. I don't, we can go from anywhere from 5% to 17%, whatever. I get paid 5% of the total premium. Yeah. Yeah. So whatever the premium is, take 637.27 minus 5%. That's what I make per employee.
Mr. Salinas, are you recommending?
Yes, basically, I mean, we met, the committee met, and we decided to, of course, as you know, to eliminate the gap plan. We're working with the budget. Also, as you know, we're gonna be eliminating one position, so that we can make budget for next year. So our recommendation for this is for approval, and of course, we're gonna keep the same plan except removing the gap.
Sure.
Any questions, comments by the board? And
Ma-
it's, Mr. Reyna, it's within the budget, correct? And that's why we have the budget workshop.
Mr. President, may I address Mr. Perez?
Yes, sir.
That gives me $2,294.17 a month, sir. That's my commissions. So if you multiply that times 12, I make $27,530 a year.
That's on this one. Then on the properties, you make an additional fee.
Absolutely, yes, sir. Mhm.
Hopefully next year they can come down. 37% is a lot increase. Right? You said
32, it's 30.8. It was the increase. And again, it's, the way the claims are based is on claims paid. So we pay them $1, and as much as we can do to prevent medical conditions and things of that nature, keeping employees healthy and proactive in, going to see their doctors, taking their medications, following their treatment plans, the premiums are based on claims paid. So if we give them $1 and they pay out more than 50 cents, well, obviously they're for profit, they're losing money. So they're gonna have to recover those
what about
losses.
the drugs? How much do we attend?
The prescriptions are all included. This is a fully insured plan. So it's all included, everything, office visits, emergency room visits, major surgeries, prescriptions, all of those things are taken into account when they look at the big picture. And we were at 147% losses. So that means that for every $1 that we paid, they paid $1.47. And our goal, like we've done in the past, is we've stayed at 50% or less, and that's why we were able to keep getting decreases and discounts. Yes, sir, and that's our goal. Now, I'll be totally honest, I've mentioned it to the benefit committee, and I think we spoke about it at the budget meeting, that it's gonna be very difficult over the next few years to get back to the $437. Even if we have tremendous years and we're under 50%, they're going to give us discounts, but it's going to be at 3%, 6%, depending on how well we do. Obviously, if we're keeping our costs, our claims below 40%, well, guess what? I'm going to go fight for 8, 9, 10%. But it's, it just depends. So it could take us years.
Yeah, that was going to be my next question. How
Yes.
long was this going to affect us through the following years?
Well, right now, the trend, and they call it trend, it's the rolling claims. A lot of those claims are already coming off of the books for us. So if we can continue to maintain lower monthly claims compared to if we pay $45,000 and they pay out $25,000 in claims, well, obviously, we're doing better.
Yeah.
And that's our goal, is to always have less paid out than what we pay in premiums, because that makes my job easier to go,
Yes.
discuss with
How
them.
far back do they look at us? How far
It's an
back?
18-month rolling period. 18 months. They go back a total. So
18 months.
every month, it resets 18 months because that last month falls off. So now they go 18 months and 18 months. So we're already trending, in the last 3 or 4 months, we're under the 50% margin. So we're doing well. It's just we need to keep, reminding the employees to please be proactive. Monitor each other. I mean, you work side by side. If, Juanito is not taking his prescriptions for high blood pressure. Hey, Juanito, what are you doing? Work with us to take care of yourself. Police each other. Be responsible for each other. It affects your health insurance benefits because I tell everybody, SUD, we don't have a bridge that makes $6 million a month like some of these other cities.
Yes.
We have a very small pool of funds that we need to work with, that we can work with. So you need to help SUD. SUD, minus the gap plan this time, has the best benefit package, bar anybody, better than the school district, better than the county. And they have a lot more money than we do. However, SUD believes in the fact that if we provide great benefits for the employees, you're going to have what? A loyal employee, a dedicated employee, a hardworking employee that's going to produce for you. And they're not going to be jumping ship and going anywhere else, so you have retention. And that's important.
Yes.
And that's the job that I accept the role of trying to do that, educate the employee. Look, this is what SUD is paying for you and your family. And, look at all these things. So you think that I'm only making $12 an hour? No, let's put the pencil to it. You're actually making $22, $23 an hour because of everything that SUD pays for you, for your family. Because even though it's not covering your dependent care, it's covering you. You're the breadwinner. So you impact your family. And that's part of my job, to educate them, to help with the loyalty, with the retention, the productivity and things of that nature. So,
Thank you.
yes, ma'am. Mr. Perez, so any other questions
No, sir.
on that, sir? Okay.
I need a motion.
Person.
I need a motion if we're gonna approve it.
Yeah. Okay, I make a motion.
Item number 2.
Okay, I make a motion for the approval of the employee health insurance plan and all the voluntary auxiliary products as presented by I Am Insurance Agency.
I have a motion by
Second.
Diaz. I have a second by? By Perez. All in favor, signify by saying aye.
Aye.
Any opposed? Motion carries. Item number 3, discussion of possible action regarding selection of property casualty and workers' compensation policies. Mr. Martinez?
Yes, once again, I also represent SUD in this particular programs also. We have a property and casualty program that includes workers' comp. And in the property and casualty, if you look beyond the first page, this is the first page, we'll come back to that. Look at the other subsequent pages that are attached to the packet. It starts with coverage summary, annual premium on the very top. These are the policies that we have coverage for SUD. When we came in 4 or 5 years ago, we did an audit, and we found that the company that we were with was charging us almost $280,000, $290,000 a year, and we found some coverages that we were paying for that were from engineering and stuff like that from 15 years ago. So we did a complete forensic audit, and we found we had properties that were undervalued, so they were underinsured. We had equipment that we no longer owned that was on the list. So we did the auditing, and we did, you know, the evaluations and stuff, and then we went with this company here called Philadelphia. And we've been with them now. This will be our 4th renewal. And again, we do the same process. We follow it with the benefit committee, and then we get with the general manager, and then, of course, they make a recommendation, and subsequently we meet with the board for final approval. So on our plan, nothing has changed as far as our limits, okay, our coverage limits and our deductibles and, you know, all those other things. Nothing has changed. What has changed is we've grown. And I say we because I feel that we're a team. I mean, that's the way I look at my job. We've grown. We've added more water meters. Subsequently, our sales have gone up. We've added more payroll. So they do the audit because it's based on payroll. So obviously, we have an increase due to that. And then, of course, we have had claims this last year because of the storm, the freeze. So obviously, they have to pay those claims minus our deductibles and things of that nature. So that has an impact, just like it does on the health insurance. Our claims, we do have one open claim left that has not been settled. However, Philadelphia is very comfortable in the relationship that they have with us. And normally, by law, they cannot give us these rates until 30 days before the anniversary date, which is January 1. However, they understand the situation that we're in, is that we're in a budget workshop, and you guys are trying to settle the budget for the next fiscal year. So they gave us these numbers so that we could input them into the budget. There's going to be some changes because they still need to add some discounts to the policy. It's just they're finishing up some final auditing numbers and things of that nature. So, you know, this is not the final fixed number. So you can see that we have on the package, we call it the package, we have commercial insurance, property and systems breakdown. We have the inland marine. We have general liability, wrongful acts and professional liability, employment practices, commercial crime, business automobile, and the umbrella, excess liability. So we have more coverage now than we've ever had. We didn't have any underground line coverage. We didn't have any delivery of services, interruption coverage. We had no directors and officers coverage before. Yes, ma'am.
I have a question.
Yes.
I know I had spoken to Mr. Salinas regarding that. Do we have cyber
Yes.
protection?
Yes, ma'am.
in this policy?
It is in here. We have cyber protection. Yes, ma'am. In
Can you
case we get
explain
hacked.
a little bit more on that cyber protection? Or just a brief, something brief?
Sure. Let's just assume that
'Cause I
we
know
get
there's
hacked.
been- There's been cases
Yes,
where, like, I think it was
absolutely.
in Florida, where they hacked into the AGUA system and,
Yes, ma'am.
luckily they were able to catch it before it went,
Absolutely.
it was released, but,
Yes, ma'am.
that's something that I think we need to be on top of because it's something that could happen and it's something that a lot of people don't. Since you
Absolutely.
can't see it.
Yes,
it doesn't-
absolutely. And we do have it. It would be under commercial crime. We have it there. It covers our cyber liability. And we also have it on another section on a standalone, which is cyber. We do have that for protection if we get hacked. And you know, there's a lot of information on there that on customers and our accounts, our money, things of that nature. We have coverage up to $1 million. And then we have the other fraud, employee theft, you know, those type of
My
things.
other concern was the systems for the
Right.
actual water, like our chemicals and everything that gets hacked into. That's my concern too.
Okay, and it would be covered under there. However, we also have coverage under a general liability. The way we've designed this plan, it's a complete umbrella. We would get coverage from several different parts of the program. Okay, it's not just one section. You know, that's why we've designed it to interlock and intermingle with each other. It's not just, well, that's all we've got. No. We have the general liability. We have the computer fraud. We have the property insurance because of the damages that are going to be caused. We have, trust me, we are covered. I mean, if there was a body Band-Aid, there's nothing exposed.
Okay, good.
We've taken great pains, taking measures with my MGA to make sure that our SUD is not naked in any point or any part of the business on the delivery method or is business interruption. If somebody comes and holds us hostage, I mean, we have it covered.
And that claim you said has not been resolved. What is
We have one claim. I think it's an auto accident, ¿verdad, Albert? It's an auto accident. It's a small claim. It's
How
not.
long has it been active for?
back later, like a month or 2 months later.
She felt a sore back.
Yes. So she wanted to give us like, and that's why it came
Okay.
into.
Somebody got a hold of her and said, oh, AGUA Special Utility District, they have good insurance, we should go after them.
Did it go up with the premium from last year? This one?
Slightly, not very much. And again, the reasons for that, okay, are we added more water meters, more customers. So obviously, you know, they added us because of that, the sales. We added more payroll. So it's based on that, on the workers' comp, on the rates and things of that nature, and of course the open claim. Because we have a complete package, like I said, all of those, and then you have the workers' comp. And that is based on claims, and we had some claims on workers' comp. Weren't crazy like we did with the health insurance. However, those are still, they have to be calculated. They can't just throw them out. And then, of course, you know, our payroll, it went up. So because our payroll went up, they changed the mod number, the modification number that we're calculating it off. So they brought that down because they want to stay with us. They understand that, you know, the freeze was something that nobody anticipated or thought was going to hit us, and it hit us. So obviously they have to adjust, and so do we. However, they're willing to work with us. We did go out, and in your packet, in the last 3 pages, you'll see we went to Travelers, which is also a worldwide company, and they declined, said, no, the property exposure is too much, and you know they don't want to deal with it. And then if you look at Star Technical on the 2nd page, this quote for $175,000 is only for the property, which is the buildings, the water towers. Doesn't include our auto, doesn't include our workers' comp, it doesn't include the general liability, cyber. So can you imagine what the package was going to be like?
The math on the values is 34, it's 52 and 12, it's just, they just adjusted it over.
I'm sorry, what was that, sir?
The values, property damage and underground pipes. It says a total insured value,
For which one?
34 million. I'm looking.
The TIV, the total insured value was 34,216, and the base premium was 149,424. And you know what our
But
property?
the values on top, it says a little bit higher, 52 million than 12 million.
Right, that's property damage. That's what the value of the property, because what we have is actual cash value and or replacement cost.
It doesn't add up, so it's 34 million, that's what they're getting at.
They're saying that that number on top, the 52,360, is not even close to what we actually have in property values. We have 53,122, 195. Those are our actual property values that we have. Okay? Those are, because when we do the audit every year that we do the supplemental application to update the numbers, this is the property that we have insured, the buildings, the water towers, everything. This is the actual value of it. This is what what we're insuring. So if we have a water tower that gets demolished and it costs us $6 million, well, minus the deductible, we've got $6 million from the insurance to replace it or repair it, whatever it takes.
So
They're
actually,
over here.
You
Monday?
only have $34 million then.
That's what they were saying right there. They're saying, you know, wait a minute, it's 34,216. So they're undervaluing us, and then they want to charge us $176,000.
So what are we gonna do?
Well, we're not going with these.
We're not going with these people?
No, I'm just showing you because of the auditor.
Those are the quotes that
The auditors, they require us to get 3 quotes. So we have the current one, and then the 2 other quotes that obviously we're not going to consider them, obviously.
Yes.
But for the record, and to satisfy the auditor's request, I did go out and get 3 different quotes. The one that we are going to look at and discuss and hopefully approve will be the one that's right under. There's the IM insurance, this is the summary, and then you have the coverage of summary, that's the second page, and then the Texas Mutual, okay? So we're gonna discuss the 3 pages. One is the Philadelphia, where it says the commercial property and system breakdown. Okay, we have a blanket limit of 53,122,195. And before, with the other company that was here before me, it was actual cash value. So they were valuing the properties. One of our water towers, they had it valued for $1.2 million. And it was actually valued at almost $6.5 million. So if anything would have happened to that, where was AGUA SUD going to get the money to pay for it? Because they weren't, they were only going to pay the 1 point something. So we changed that to replacement cost, 100% replacement cost. So that if it get, obviously they'll have a little depreciation there, I mean, everything does. However, for the most part, our SUD's got to worry about deductibles, and the rest is covered by the insurance. Okay? And then we have the inland marine, which is our equipment, generators, things of that nature, that's covered in there. It's included. We have a scheduled limit of 426,361 pieces of equipment. Then we have our general liability, and it's based off of payroll. We were at 780,000 last year, and now we're at $1,102,000 just water. That's our payroll for the employees. Then we have 393,000 for the people that work at the sewage plants. And our limits are 3 million, 1 million, 3 million is our coverage. And then we have medical, 10,000, includes failure to supply, name pollution coverage. All these coverages are covered under our general liability policy, okay? Wrongful acts and professional liability, this covers the DNO, the directors and officers. If we were to miscommunicate something or do something that we shouldn't do, this is where the wrongful acts would come in and cover the directors and officers. On top of that, we have a separate bond that covers everybody on the board, okay, that AGUA SUD pays for, and that's outside of this program. Then we have our commercial crimes, going back to theft by employees, sexual harassment, anything like that, cyber liability, it's all part of here. Then we have our commercial business auto, and then our umbrella. And of course, the umbrella is exactly what it sounds like. If we had a situation where we had a really catastrophic situation, and they sued us, and it exhausted all of the limits that we have in each category that it pertains to, and they still needed more, they would then kick into the umbrella. We have a $4 million umbrella that would make up the difference that is not covered or exceeded what the other policies had. So like I said, we are covered, okay? So, and if you look at the subsequent pages for Texas Mutual, that's the workers' comp. The workers' comp, we have two different options. We have in-network and we have out-of-network. And we switched about a year or two ago and went within network, which is a little bit more restrictive as far as the network. There's doctors that are in that network, and it helps us keep the cost down. And the difference is significant. It's a little over $6,000 to go without a network, where it's a wide open network, and we can't control, a little bit at least, what happens with these physicians in the workers' comp network. With these other physicians that are restricted, they're going to take care of the employee, absolutely. However, they're going to take care of the employer also, and make sure that our employees get the proper care, the return to work, and pay their salaries, and all those things. So we're recommending. Oh, by the way, the third page of the Texas Mutual, if you look at that really quickly, briefly, you'll see that since we got here, we've gotten what's called a dividend refund. Texas Mutual is a company where we partner with them, and according to our claims and our payroll and whatnot, and how the company does, okay, we're shareholders. So when they profit, we profit. So we've gone from 2019 getting a dividend check back from $3,483.31 in 2019. 2020, we got $2,252.36, and this last year, we got $13,414.55 back. Now, because we're renewing for the fourth year, we already qualify for a dividend refund. However, that won't come to us until February or March. Now, the numbers that we're going to discuss in my summary page show the total premiums for 2021 was $202,283.95. Our renewal is going to be $210,140 for 2012. That is not the final number, because we needed something for the budget. They still have to add discounts, so we could possibly, according to my underwriter, anywhere from $1,000 to $5,000 discount, because they're adding some different mods and things like that, and of course, making sure that it's not going to be a crazy claim, and all these other factors that only they know in the system. So we could get another $5,000 discount maximum, or 3 or 4, but we're going to get a discount. It's not going to be the final number. It's just for the budget purposes. It won't be more than the $210,140.
Additional to the 13,000, right?
The 13,000, we're gonna deduct that already. So if you look, and you'll see further down my numbers, of course, you'll see that where we were at in 2019-20, we were at 194,737. And then last year we went up to 202. This year we're at 210. So we have an increase from last year to this year of 7,856.05. Then you subtract the dividend of 13,415 from that. So we're way down. We're close to the 196,720. We're almost at the original price when we first started.
Back in 20.
And keep in mind, we're still eligible for more discounts this year, and we're eligible for another dividend check. So the 210 is just for budget purposes. We won't be above that. And we have changed absolutely not one coverage, not one deductible, not any of those things. They're all there. The only changes are, of course, we have an increase in sales, we have an increase in payroll, and it's just normal for that to represent in the pricing. So, questions?
Thank you.
Yes, sir, Mr. Perez. Yes.
On the budget for 2022, Jaime, it was a total of 210, right?
Yes.
210,000. So we're above 140. We can modify the $140 within the budget.
Yes.
And then, of course, we'll get the discount, but at least where we can approve for December 6th meeting.
Yes,
It can be right on the,
it'll be in there.
okay. Any other questions by the board?
Smiley, can I?
Yes, sir.
Smiley, you mentioned that directors are covered by a different.
We have two different coverages, okay? We have two different coverages. We have a bond because it's required by the state, okay? So we have that bond, and that's $70,000 on each one of the board members. And then our directors and officers is covered under the professional liability and under the wrongful, what did I tell you it was?
Wrongful acts and professional liability.
Yes, exactly. So if you make a misrepresentation, you do something that should not be done, and, you know, we're sued for it, that's going to protect our SUD and pay for it, and it comes with legal. We'll work with our in-house legal also, representation. So all of that, you've got better coverage than most anybody else as directors and officers, where you had zero when we first came in, 3 or 4 years ago. There was absolutely nothing, that we had, other than that small little bond that was required by the state,
state.
Yeah,
Yeah,
something like that.
Yeah. So that was it. So now we have 70,000 because it's 7 of you that we have on there. And I think we pay like 400 and something, 500 and something a year. And it's for 4 or 5 years. It's a long term, so it's not every year that we pay for it. And we're with CNA, and it's Western Surety. It's one of the top surety bond companies in the country. So.
How about for any, like, let's say a director is traveling to Austin and, God forbid, it's involving an accident. That will be covered as well?
If the director is in a company's vehicle from our SUD, okay? Any employee that's driving in an our SUD vehicle, the insurance would cover medical and our commercial auto. As far as if the employee is traveling in their own vehicle to go to a conference or whatever, no. We don't offer that type of coverage at our SUD. Okay, that would be their own personal vehicle or medical. They're not on the medical insurance at this time. That would have to be something that internally, I don't know what the policies and procedures are to allow them to be part of the medical insurance. That's something that would have to be decided and changing, your policy and procedure handbook. If that's something that would be allowable on the major med, at this point, that I'm aware of, no.
Any other questions, comments? You recommend approval, Mr. Salinas?
Recommend approval, yes, sir. So move.
I have a motion by Rodriguez.
second motion.
I have a second by Diaz. All in favor, signify by saying aye.
Aye.
Any opposed? Motion carries. Need a motion for adjournment at 12:36.
Make a motion.
I have a motion by Solis. I have a second by Cesar. All in favor, signify by saying aye.
Aye.
Any opposed? Motion carries.